Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you here for another packed update on what's moving the markets. Today, December 17th, 2025, we've got a lot to unpack with some significant shifts in the major indexes, standout performances in large-cap stocks, and key economic themes shaping the outlook for 2026. So, let's dive right in and see where the opportunities lie for us long-term investors, while keeping an eye on those short-term waves. First up, let's talk about the major indexes and how they performed today. It was a rough day across the board with some notable declines. The S&P 500 took a hit, dropping over 1%, signaling some broader market caution. The Nasdaq wasn't spared either, sliding close to 2%, largely dragged down by weakness in tech-heavy names. The Dow Jones also saw a dip, down about 0.5%, while the Russell 2000, representing smaller caps, fell over 1%. Volatility is creeping up too, with the VIX jumping nearly 7%, hinting at growing uncertainty among investors. For us long-term players, these pullbacks can be buying opportunities, but it's a reminder to stay vigilant on broader economic signals. Now let's check out some of the big winners among large-cap stocks today. Energy was a bright spot amidst the red, with ConocoPhillips and Occidental Petroleum rallying over 4% each, likely buoyed by geopolitical tensions and oil price movements. EOG Resources also climbed nearly 3%, showing strength in the sector. Outside energy, Chipotle Mexican Grill spiced things up with a gain of almost 4%, reflecting consumer resilience in certain discretionary areas. These moves highlight pockets of opportunity, especially in energy, which could be a defensive play if market volatility persists. On the flip side, the losers list was dominated by tech and growth stocks, reflecting some profit-taking or sector rotation. Tesla skidded over 4%, continuing to face pressure amid broader EV and growth concerns. Oracle dropped more than 5% after reports of delays in AI infrastructure plans spooked investors. Palantir and Advanced Micro Devices also took hits, both down over 5%, as the tech trade cools off. For long-term investors, these dips in high-growth names could be a chance to accumulate at lower valuations, but timing and conviction are key. Looking at the market movers by activity, Nvidia saw heavy trading despite a near 4% drop, showing that investors are still very much engaged with AI and semiconductor plays. Tesla was also among the most active, reflecting its polarizing narrative. Comcast, on the other hand, bucked the trend with a 2% gain, possibly tied to media sector developments. These names are often bellwethers for broader trends, so keeping them on your radar can give clues about market sentiment shifts. Diving deeper into the most active stocks by volume, we see familiar faces like Nvidia and Tesla leading the pack, underscoring their influence on market dynamics. Warner Bros. Discovery also caught attention with high activity, likely linked to ongoing merger and acquisition buzz in the media space. Canopy Growth popped up too, with a near 5% gain, riding the wave of cannabis sector optimism. These high-volume movers often signal where short-term momentum might be building, even if our focus remains on the long game. Shifting gears to broader economic news, there's a lot of chatter about 2026 outlooks. Inflation remains a hot topic, with reports suggesting it's stickier than expected, which could influence Federal Reserve moves. Unemployment is also on the radar, with forecasts pointing to potential rises next year, something to watch as it could impact consumer spending. Meanwhile, the Fed's stance is under scrutiny. Governor Christopher Waller emphasized the central bank's independence and hinted at room for rate cuts if inflation eases. For us, this means balancing growth investments with some defensive positioning as policy uncertainty lingers. Let's zoom in on the S&P 500 for a moment. Despite today's drop, some analysts are still bullish for 2026, projecting gains driven by anticipated Fed support and AI-driven efficiencies. However, others caution about high valuations and mega-cap concentration risks. As long-term investors, this mixed outlook reminds us to diversify and not chase overvalued trends. Patience could pay off if we see a broader rotation into undervalued sectors. Over on the Nasdaq, the tech-heavy index is feeling the heat from a sell-off in big names, but there's optimism for a rally into next year, with some technical analyses pointing to significant upside by mid-2026. The AI narrative continues to dominate, though concerns about a bubble are growing. For us, it's about picking quality tech innovators with real earnings power, not just hype, to weather any short-term volatility. Earnings season is heating up, and this week's calendar has some heavy hitters reporting. Micron Technology is in focus today, with Wall Street expecting a strong performance driven by AI and data center demand. Could be a catalyst for the semiconductor space. FedEx and Nike are up later this week, offering insights into logistics and consumer discretionary trends. Carnival Corporation is also on deck, and with strong bookings reported, it might signal continued travel demand. These reports can swing sectors short-term, but for us, they're data points to refine our long-term holdings.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Taking a quick look at the past week's top large-cap gainers, Lululemon surged over 12%, showing strength in consumer cyclical spending. Tesla also made the list with a 9% weekly gain, despite today's drop, reflecting its volatile but influential status. Comcast climbed over 7%, possibly tied to strategic developments in media. These weekly movers can hint at emerging trends worth monitoring for our longer-term strategies. Conversely, the past week's biggest losers included Broadcom, down nearly 16% as the tech rally faltered. Celestica and ARM Holdings also saw double-digit declines, underscoring the tech sector's current choppiness. These pullbacks might offer entry points for us, but only if fundamentals align with our long-term thesis. Sector-wise, over the past week, communication services managed a slight gain, holding up better than most. Technology, despite a rough week, also eked out a small positive move. Consumer cyclical and basic materials showed resilience compared to steeper declines elsewhere. These sector trends can guide us on where to allocate for stability or growth as we build out our portfolios. On the downside, energy took a beating, down over 2.5% for the week, despite today's gains in some names. Real estate and utilities also lagged, reflecting sensitivity to interest rate expectations. For long-term investors, these underperforming sectors might be worth a second look if macro conditions shift in 2026.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.